Alright, for this video, I'm not going to be using my webcam just because I want you guys to actually look at the charts. Stop looking at me. Alright. Anyways, today we're just going to be talking about Asia, London, and New York session, what these three sessions are, what they do, and how can they be used to our best advantage. Now, these three sessions, all it means is the big institutions in Asia are trading from 1900 to 0200. Same thing with London, 0300 to 8:30. Same thing with New York. We got Wall Street coming in at 8:30. They stopped trading at 15:45. Now, I want you guys to also take some notes. Understand when these open up. Asia opens up at 1900, closes at 0200. London opens up at 0300, closes at 8:30. New York opens up at 8:30, closes at 15:45. Now this is in 24-hour time, so you can convert it if you want. It's up to you. Now each one of these sessions have something that they need to accomplish. Whether that's taking a withdrawal on liquidity, rebalancing a fair value gap, or an inefficiency. Now let's go to 1 hour right here. And we're gonna understand what is going on right here. Now, what happened was we came up and we took out some sort of liquidity right here. This happened to be previous day. I think this is previous. No, this is Thursday, November 6th. We had these highs up here. What happened was we came up, liquidity sweep, tapped into that pool of money that we were talking about before, and then we got legs lower. Down to where? Some more draws in liquidity right here. Bang. Oops. Bang. 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 Now, when our lows are stacked up just like this, guys, this is usually low resistance liquidity. When the lows and highs are all stacked up just like this, bang, 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 this is low resistance liquidity that we're probably just gonna run through. Also notice how each and every single one of these lows is a New York low. So it is a pretty big draw in liquidity that we're probably gonna take out. And then to also understand the concept of the session highs and lows and how to use them to our advantage. What the hell just happened? And Q. All right, so let's go back because I don't think there's any good examples here. All right, right here. Okay. Asia session. What happened? Asia session, we came up into this fair value gap. And we also rebalanced this leg. So what this price always wants to do, rebalance inefficiencies, reach equilibrium. That's exactly what we did right here. So we had this leg up, rebalancing, and then we came down and we swept liquidity. What did we sweep? Last day's low, New York low. New York low got swept. What happened? We got legs up. We swept Asia high. What happened when we swept Asia high? We went lower. New York came in. What happened? We swept London low. If we zoom out, we probably swept some other type of low as well. Yeah, we swept these lows. What happened when we swept those lows? We got another move up, sweeping London highs again. Or not again, but we swept London highs right here, bang. What happened here? Asia session had to move up, swept Asia session highs when London came in. London came in. London highs. First of all, this is an amazing example right here for how you can trade these session highs and lows. So London low is right here. London low is right here. Nope. Bro, I hate this. London low is right here. What happened when New York opened up? We had this move up, sweeping London high. Move up, move down, sweeping London low. As soon as we swept that, what happened? Rampage up. Fucking bang. Shot to the moon. What happened here? We had New York open, New York high right here. Asia came in. What happened? We swept New York high. We went lower. What happened when London opened up? London opened up. We swept Asia low. We had a little bit of a pullback from that, but then we kept going lower. London low got swept right here. As soon as London low got swept, we came up, swept London highs, swept Asia highs, and etc. Now, my entire point of this video is for you guys to understand fully liquidity sweeps and to actually understand your primary draws on liquidity. Your three primary draws on liquidity is going to be Asia, London, and New York. Previous day highs and lows as well. So previous day highs and lows would be right here. We had New York right here. We had New York right here. We had Asia right here. So if I was actually trading this, this is exactly how I'd want to be marking everything out. I'd go on my 15-minute, my 1 hour, doesn't really matter. Higher time frame holds higher power, so you can probably just do 1 hour. But this is exactly how I would be marking everything out, line by line, to really understand where the market wants to go. So now we can actually understand what happened. Asia came up, resweep of Asia high right here. Leg lower, and then what happened here? We did sweep London. Oh, we did sweep Asia high. We had a sweep of Asia low. I mean, right here, with this wick, swept Asia low. What happened after that? Pull back into what? Fair value gap. What does price always want to do? Rebalance, equilibrium, and target inefficiencies and hunt liquidity. We rebalanced right here, leg lower. New York opened up and we completely sold off. Where did we go? To these lows, and as well as these lows, Asia lows, and some of these lows as well. We also targeted new week opening gap. This is what I said in my TikTok. If you watch my TikTok recap on this week, I said we're probably going to have some sort of retracement down before moving up, and that's exactly what happened today. So amazing call out on the TikTok. Amazing analysis. And yeah, this is all trading really is, guys. It's just understanding where everything is, understanding what draws in liquidity are primary draws in liquidity, what draws in liquidity aren't our primary draws in liquidity, what does price want to do, what has price done in the past. That's about it. I want you guys to really treat this as a business. Day trading isn't supposed to be some kind of side hobby. It's supposed to be a real business. Right here. Bang. And bang. I want you guys to look at these two highs. I'm going to zoom out this just so you guys can see it better. I want you guys to look at this high right here and this high right here. On the S&P, this high and this high. So these two highs, same exact thing as these two highs, okay? Our indices are correlated. NQ and ES is correlated. They are moving the exact same way. They want to do the same thing, all right? Most of the time. What happened here was NASDAQ swept out this liquidity point right here. What happened? Leg lower. But I also want you guys to see how the S&P took out this high, the S&P took out this high, and it is much higher than NASDAQ is. What ends up happening in these cases is we get what's called an SMT. In this case, it was an SMT at the highs. All this simply means is when one indice took out a high where the other indice hasn't. S&P took out a high right here. Nasdaq did not take out the same exact high. We know this is the same exact high. How? Because if you look on both the screens, my mouse is moving on the right side, but it's also moving on the left side. So this is how we can see everything is lined up. All right, and our dates at the bottom: 8:30, November 6th, 8:30. Where'd that go? 8:30 right here. If you go back on the S&P, same thing, 8:30 right there. All right, it moves the exact same way. Now, what happened? I'm gonna go over this one more time. ES came up, swept these two highs out. Nasdaq only swept out this one singular high, but the S&P took this out. ES took this out. Nasdaq took this out right here. All right, but ES was way higher. ES took out this, as you can see right here. ES took out this, where Nasdaq only took this. Nasdaq was way down here, guys. Nasdaq is way down here. The S&P is way up here. What does that mean? We get an SMT. This SMT, what usually happens is we get a pullback off of it. We get a reaction off of it. We can also get an SMT at the lows. What does that mean? When one indice took out a low where the other indice hasn't. Now, right here, I want you guys to see these two lows. Look it up on Nasdaq right here. Notice how this is like this, but this is like this. The ES took out this. ES took out this low right here. Nasdaq never took out that low. Why did Nasdaq not take out that low? Nasdaq did not take out the low because ES already took out the low. There's no point of actually taking that low out. If one indice took out a liquidity point, the other indice doesn't really have to. We'll still get a retrace or pullback or move off of that. That is it for today's video. It's gonna be short. Just a quick understanding of market structure, liquidity, so things like that. But yeah, that's it for this video. Tomorrow we'll be talking about more market structure, more charts, more charting, and then video after that will be psychology. Thank you all for watching. I'll catch y'all in the next episode.